The Black wealth gap is widening. We're discussing real tools and strategies to tackle it. This is about control. Education today to make a real difference tomorrow. I'm your writing off business meetings held at your home. Hi, everybody. Welcome back to another episode of Black Wealth Empowerment. I'm your host, Leslie Batson, and I'm also joined today with Jamie Coleman and Chae Dobson, both from Compass Tax Advisors. So today we're going to talk to, again, our business owners, and we really wanted to cover a few strategic tax tips, things that you can start implementing right away and apply to your business. So Chae, welcome.
Hi, Leslie.
Hi there. Welcome, Jamie.
Hey, Leslie. Thanks for having us.
Very welcome. So Chae, can you please share with us a few of your tax tips that you think that business owners should know?
Sure. So I want to go over just a few high-level tax strategies to get small business owners, get their wheels to rolling and their minds to thinking about some things that they can do differently. But I want to start out with the difference between tax preparation and tax planning. A lot of business owners really don't understand that that tax preparation and tax planning, they're two separate types of services. So when you think about tax preparation, it's during, this time of the year that we're in now, you're thinking about, getting those tax returns completed. So completing your 1040, your 1120S's if you're a business, or your 1120, even if you're a C Corp, and so forth and so on. So, tax preparation, you go into your CPA or your chain preparer and you dump out or, drop off all of your receipts and your P&Ls, your books and records, to them to enter into the tax form so you can submit it to the IRS. So that's really what tax preparation is. They're just inputting the numbers and the information that you're bringing to them. Now, tax planning, it is something that is done throughout the entire year. You're strategically doing things or implementing strategies within the business. So once it is tax preparation time, the numbers that you're now presenting to your tax preparer are strategically placed there. So you have implemented strategies where you can put some tax-free money in your pocket or move some things around where your tax burden is not as high when it gets to, tax preparation time. So tax planning, on average can save you $5,000 to $10,000 annually, just implementing just small strategies. So getting into one of my first strategies that I want to discuss, it is a tax-free home rental. So it's section 280A, 280A of the IRS code. And what it states is it allows taxpayers to rent out their home for 14 days or less, and receive that income tax-free. So where this strategy started from, if anyone is familiar with the Masters Golf Tournament down in Savannah. So, a lot of people would go into the tournament, but it was not a lot of housing. So the congressmen in that area, they rallied Congress to say, hey, put something in the code that incentivized the homeowners in this area to rent out their home during this time. And so, that is where this strategy was really birthed. So they put in the code, the 14 days or less, you can put that income in your pocket tax-free. But who is trying to rent out their home, just to get some tax-free money? I wouldn't.
Yeah.
But, by you being a business owner, there are two strategies that you can implement here. So let's just say, for example, you own a business, which you do, but you're at home, you're talking business, you may have your partner over, you may be talking to your wife or your friends about your business, and you're really digging deep inside of it. So what are you actually doing? You're holding a meeting, right? And so you have to hold meetings when you are a business because that is where progress happens. That is where you plan. So let's just say that for that meeting, you rent out your home to your corporation. So your corporation is separate and apart. So let's say you have an S Corp, C Corp partnership, it's separate and apart from you. So you would rent out your home for that day to your corporation. So what happens is you're able to double dip, and the IRS doesn't really like double dipping. So when you have a tax code section that allows you to double dip, you want to take advantage of it. Okay, so how do you actually implement the strategy? Of course, you want some type of agreement between your business as well as yourself, allowing you to actually rent out your home. But coming up with the amount that you're able to charge your corporation, that is the key. And that is the key to really any strategy. You have to understand the code and understand what the IRS is looking for. So you want to make sure it's a reasonable rate that you're charging your corporation. So how do you go about this reasonable rate? You want to contact hotels in your area that rent out conference rooms. So you want to ask for, basically everything. You want the audio visual, you want the snacks, you want the lunch, because you want a full quote on the amount that you're able, on the price of that conference room. So once you get that rate, let's just say, for example, that rate is $750 for you to hold that meeting. Now, that is what you're able to charge your corporation to hold the meeting in your house. So the corporation will be able to write it off as a rental expense. And then you, as the shareholder, because you're renting your home, will be able to pocket the money tax-free. So that's where the Section 288 comes in. So I have an example. Okay, so the example is, so let's say you quote the rent for $750, which includes the food, audio. And so basically, everything you need for a meeting. And even when you say the audio package, what if you hold a meeting at your home, you have your TV, you have your, HDMI cords, you can hook things up. So that's why that's relevant as well. So $750, let's say you hold the 14 meetings, and it's not hard to hold 14 meetings out of 365 days. So you'll be able to max that out. So that's $750 times 14, that's $10,500 in your pocket tax-free by just tax planning and using the code. So this $10,500, your business was able to write it off. You were able to put it in your pocket tax-free. So now let's talk more numbers.
All right.
All right. So let's say you're in the 25% tax bracket. And so you save $2,625 in taxes. So that's just on the federal side. And let's assume your state rate is 6%. So you've saved another $630 on the state side for a total of $3,255. So that's not chump change for a small business owner. What could you do with an additional $3,200 in your pocket tax-free, throughout the year? So, and additionally, we talked about the business being able to expense this as well. So you also save on some payroll taxes that if you would have been paid directly, you would have had to pay payroll taxes, or the business would have paid payroll taxes on that money. So that's $787 in payroll taxes that are saved. So in total, just this little strategy for something that you're already doing, you're saving about $4,000. And that's on the low end. I would say $750, that's on the low end of what a reasonable rate. I've seen them go up to, $1,500, $1,600. But again, it's based on your area, it's based on that reasonable rate. So I just encourage business owners to implement this strategy because it's a freebie. It's something the IRS is giving you. They're allowing you to double dip. It's a benefit of being a business owner, and you're benefiting for something that you already have to do anyway. Because you think about this, when you are a corporation, you have something that's called corporate formalities. So a corporate formality is that, if you are a corporation, you have to hold at least one meeting a year. And again, like I said, you're holding way more than that anyway. So go ahead, document it, and implement this strategy. Now, if you need assistance with implementing this strategy, of course, you can always reach out to us. We do provide all the documentation for any tax strategy that we implement, and documentation is I would say, the most important thing that you will need to have for any tax strategy, because in case of an audit, the auditor will want to see how you've documented, where are your meeting minutes, how did you come up with this reasonable rate? So we provide all the documentation so you can feel comfortable and confident in implementing this strategy. And so, that is the tax-free home rental strategy. It's a great strategy. Jamie and I, we implement it each year, and it puts tax-free money in our pockets.
I love that. No, so just one question.
Okay.
What if you have an LLC? Does this only apply if you have a C Corp, or does it apply if you have an LLC as well?
You know what, Leslie, that is an awesome question. So, and that was another thing I wanted to talk about, but an LLC is a product of your state law. It's not a taxable entity, right? So you have an LLC, and so for tax purposes, it has to be taxed as a sole proprietor, a partnership, an S Corp, or C Corp.
Right.
So you have to be a corporation or partnership to implement this, not a sole proprietor, because you remember, when you're a sole proprietor, you are the business. So it's not a separate entity. So this is a strategy that we implement for, those business owners who have a corporation or a partnership. But we're going to get into that a little later too. When is it time, to stop that Schedule C and move on to, an S, a C, or partnership? Because LLCs taxed as a sole proprietor or sole proprietors, they're 700 times more likely to be audited than a corporation. So, so we'll talk more about that.
But to answer your question, yes, Leslie, as long as they are what Chae said, a corporation or a partnership, taxed that way, then yes, an LLC can take the benefits of that.
Perfect. This was great, ladies. This is one tip I did not know. So
Good.
All right. So if anybody wants to reach you to find out more about this tax planning, how can they reach you?
You can always reach us at our website, www.mycompasstax.com. You can reach me via email, chae.dobson@mycompasstax, or you can always call us 850-273-7193.
All right. Well, thank you, ladies. I appreciate it. And we will chat next time.
All right. Thank you.
Okay. Bye-bye.